Welcome back to the Monocle Banking Podcast, where banking meets the real economy, and the numbers are certainly only half the story, as always, curated by Monocle Solutions. I'm your host, Michael Avery, and in this episode, we're turning up the heat on one of South Africa's most urgent and frankly combustible challenges, energy, with bid windows that promise more than they deliver, a gas cliff looming in 2026, and billions in renewable deals that still haven't reached financial close. How are banks like Standard Bank helping to plug the gaps and to balance the grid and really reimagine the continent's energy future? My guest today is someone who's not just funding that transition, she's helping to shape it. Rentia van Tonder is the head of power at Standard Bank Corporate and Investment Banking, and she's been involved in over 10,000 megawatts of closed deals across the continent. And she joins us now to help unpack what's working, what's not, and what's next, obviously. Rentia, great to have you back on the podcast, and you've really been at the coalface, excuse the pun, of South Africa's energy transition. Just set the scene for us. Where are we right now in terms of the maturity of energy financing and the ecosystem across Africa and South Africa specifically?
Thanks, Michael. Yeah, it's such an exciting phase in the sector, and I think not only in South Africa, but across the continent. And just to get back to your positioning statement, I think this is a point in time that we realize that we need to think different about energy. We've seen significant changes in South Africa, not only driven by some pain points, some challenges by some companies around supply, tariff projections, and ESG, but more so change in regulation. So from a financing point of view, we've definitely taken the position that you need to take a holistic approach. It's not only about solutioning for now, but take a far longer approach in terms of how do you position yourself and partner with your clients in the broader ecosystem of energy solutioning.
Now, when you speak about that partnership, and given the things that are changing and how rapidly they're changing, you've written recently that banks must shift from reactive lenders to long-term strategic partners. What does that actually look like in practice on the ground?
Yeah, I think, Michael, we can argue in different ways what is the role of a commercial bank specifically, like Standard Bank. And I think what we find is that in the energy universe, you certainly have to have a more long-term vision. Continental energy markets do develop over time, and they shift as priorities change, as pain points are being derived upon, and how a bank should look at it is not only through a short lens, but also looking at it beyond just the now. So what we've done and what we find is quite critical is to partner with your clients. Look at it from where are the policy shifts? How do you see the future developing? How can you position yourself not only internally, but also externally in supporting those clients, in driving the right debate, also getting a better insight and foresight in terms of developing those opportunities through partnerships? So it's definitely not a reactive lending approach anymore or being triggered by a funding request. That is not our approach. We, as Standard Bank, definitely believe you need to partner with your clients and help to craft the strategy and the roadmap going forward.
Especially given the experience that you've developed inside the bank, you could see potential strategic fits or opportunities that would then, offer another opportunity for the bank to lend into. So it really is a mutually beneficial approach. Let's just talk energy mix quickly. And if we look at the energy mix and the IPP market fundamentals in South Africa, we know that Eskom is still perilously close on its reserve margin. From where you sit, how is the conversation evolving around the balance between renewables and gas and coal, especially in light of what we hear about in this looming gas cliff next year?
It's definitely an interesting conversation. As a bank, we've taken the view that we need to have flexible power. We take a very strong view that one needs different types of technologies. I think there's a definite need for more gas to power to come in to play its role. We've seen significant rollouts of battery energy storage through the IPP program run by the IPP office. And with that, it will unlock more renewables. But at the same time, you need gas to power as a mid-merit technology. So I think the conversation is certainly emerging. We've seen Eskom definitely coming to the party in terms of more stable supply. Systems, power stations are running. We see the reserve margin being reduced. And I think to that extent, we are confident that with the new generation coming in, that we're making great progress. But in the long term, you need to ensure that you have sustainable supply across different technologies.
Yeah, and I'm really pleased to hear that becoming part of the discourse more and more. That kind of Overton window is shifting towards what, from the outside, certainly appears to be a far more pragmatic approach to our energy mix. And, if we look at the constraints on gas, at least we're having the conversation about what do we do with Rovuma and the Ronco pipeline. As someone who lives in Parkview, we're customers of Egoli gas, and there's obviously concerns. You use gas in your mix. I've got gas geysers, gas for cooking, but they're industrial concerns that we can't ignore as well. If you look at the need for new gas infrastructure and the role of kind of LNG versus indigenous gas, what signals do you need as a bank to start to unlock funding for these kinds of projects?
I think what's important is to acknowledge that, the enabling environment, the policies need to be in place. The willingness from government to fast track infrastructure, whether that is for importation of gas or just rolling out increased pipelines or supply into industrial zones. So that is critical. And I think to this extent, we've seen some positive moves. We've also seen the anticipated gas to power RFP being revised and new advisors being supporting the IPP office, and hopefully we'll see a RFP towards the second part of this year, probably Q4. And I think that will also be an important message to signal the commitment from government to actually fast track the introduction of different technologies, including gas to power, which, like I said, will be welcome.
When we look at the renewable side of the equation, if we look at what's working and what isn't, I think there's some important lessons from Bid Windows 5 and 6. And if you look at what happened through Bid Windows 1 to 4, often you could bid and one got the sense that you could be really aggressive on your margins because the costs were always coming down. So even between the time you submitted a bid to the time of having to go and get to financial close, even if your margin was razor thin then, because those costs were coming down, it would pad out that margin. Bid Window 5 was hailed for its low tariffs, but it then struggled with financial close. Bid Window 6 has had grid constraints. What went wrong from where you're sitting, and what structural shifts are needed to restore credibility to the REIPP process?
I think it's an important question to ask. And when you look at the detailed reasons why, in most of the cases that you've mentioned, some of the projects didn't proceed, there's good reason for that. And I think the key thing that we do see going forward is absolute clarity and certainty around grid allocation, projects that have received a bid award, whether they have the ability to proceed. So I think the challenge we had was with some projects not closing in round 5 because of various reasons. Some of the projects in round 6 couldn't proceed or has been delayed. Now in round 7, we again saw the same challenge around wind not being awarded because of grid. And in some cases, government also indicated that some of these tariffs were too high. So we do anticipate hopefully, BAFO best and final offer to be published by government to say to those wind bidders who had grid connection, please come and provide revised bids. And if that is the case, we can fast track wind, which is also critically needed. I think the credibility of the program is important, and therefore we certainly need to get a positive message around, especially wind not being awarded a second time after round 6 and now round 7.
Yeah, and I picked up in Parliament the other day talk of really improving the time when it comes to putting a bid window out to getting power onto the grid and really reducing that fundamentally. What would you say would help speed up that time through, going to market to getting a project ready and financeable to actually generating megawatts that are on the grid?
I think it's a bit of a combination of a few matters. I think one of the key things is certainly the process around grid. If there's a substation or self-built grid connection to be built, that is also critical to get the sign-offs from Eskom, to get the costs. In many cases, there are some complexity around that, especially if you're in areas where there are grid constraints. There is the ability to connect, otherwise you won't have the luxury of awarding a bid. But at the same time, it does delay in terms of issuing the final budget quote. And we've seen that. At this point in time, for example, battery energy storage round 2, bids have been awarded quite a while ago, and we would really like to proceed in closing those projects because they are strategically placed to be able to unlock more renewables at those selected substations. So at the moment, we're still waiting for feedback on budget quotes, for example, just as one matter. I think on the financing side, most of the commercial banks, including the DFIs, are well versed of the program, very comfortable on how we finance it. I think risk allocation, standardized documents are all well received and in place. And I think the key thing for us is just to be absolutely strict around timelines. And it goes both ways, not only from a developer, a sponsor, or a bidder side or a financier side, but from Eskom and government side as well, getting all those approvals and sign-offs in place.
Yeah, there are so many. And if you look at our interim grid capacity allocation rules, which is something of a transitional regulatory framework, it was introduced by the NTCSA, the National Transmission Company. It's overseen by NERSA, the energy regulator, and really governs how grid access is allocated to IPPs and to prioritize projects that are most likely to reach commercial operation and to avoid things like grid squatting, for example. From a banker's perspective, are the rules achieving their goal of prioritizing shovel-ready financeable projects, or are we still seeing grid squatting and maybe more speculative applications?
I think what we do see is a process map and rules that's quite complex, although it's trying to achieve the right objective on paper. Whether that is happening in the practical side and in reality, that's still to be proven. What we do see is in the projects that we finance for the distributed energy market directly into lately traders or aggregators, that there is certainly emphasis on speed to market. And that is driven by the clients and the need to get green power into their systems, into their businesses. And I think the question for us is really, how do we fast track this? So some of the complexity around those rules are being debated at the moment. I think the key thing is that in reality, the best solution given where our market is moving towards, which will be a liberalized market with traders. So if you have a trader on the one side, do you need a signed PPA to be able to get grid access? And I think that's a type of practical questions that everybody's asking. But for me, I think one need to acknowledge that this is a step in the right approach, and we just need to be able to be flexible because I think the market is just moving much faster than everybody anticipated.
Yeah, which is fantastic. I mean, that's what we want to see. That's the beauty of these markets. And, a consistent frustration that I pick up from buyers and individuals I chat to in the IPP space, corporate off-takers in particular, is the lack of visibility on what projects are being developed, where and when they'll reach COD. Would it be helpful for the NTSA or the IPP office to publish a central kind of dynamic dashboard to track grid allocation and project milestones?
Absolutely. And I think it's a combination of projects feeding through the IPP office and private projects. So we've been tracking most of the projects that we involved and those that we are aware of in the market. Because remember, through the IPP process, you can get utility scale programmatic projects into the bid windows. But what's happening in the private market, and that's where we see a significant focus at the moment from both developers, sponsors, and off-takers, including traders, that also need to be tracked somewhere to give the market just a sense of what is actually happening there. I've just quickly had a look at what we've done to date in 2025, and It is actually amazing. We've done 11 transactions to date, of which
Wow.
6 was in South Africa, around about close to 900 megawatts just in South Africa that we've reached financial close to date, with another 225 megawatt outside of South Africa, which is for us a key milestone. If you think about the impact of those projects going into construction, being executed, and have the ability to feed into the grid or into those systems or traders selling to the corporate market within the next 18 to 24 months. There's great momentum in the sector.
That's fantastic. It's really exciting. How big is your team, Rentia? With that kind of deal pipeline? Is it just you and a couple of juniors?
No, I think what is absolutely critical is also to acknowledge, the structure and how we as a bank actually service our clients. So it's a broad team. We cut across different product areas in the bank. Most of the team sits in project finance, in investment banking, but we also have teams supporting the sector in global markets, in trade, and then, of course, in our presence markets. And I think that's also critical to acknowledge the physical presence in these countries to be able to be close to your client and support the client. What we've seen, and just to give you a quick example, what we've done in Zambia with the emerging crisis in terms of load shedding, we've done a very innovative transaction with a trader, unlocking more sustainable supply of green electrons into clients, specifically mining clients. And I think that has shown some level of innovation and how we as a commercial bank, being close to our clients, have the ability to solution and deliver within a short period of time.
And given that, we're seeing a lot more of these energy traders or corporate PPAs, how does that decentralized offtake model change how Standard Bank approaches risk and due diligence and pricing?
Yeah, it's a definite shift that we see, especially given the introduction of new trading licenses in South Africa. And we've gone through quite a detailed process with our risk colleagues, and that hasn't happened over the last 6 months. It actually started with foresight about 3, 4 years ago, where we realized that this market is going to change fundamentally, moving towards a wholesale market, introduction of traders, and how do you actually analyze and assess risk? So it's a matter of crafting your strategy, engaging internally, bring the stakeholders together, and get those principles and frameworks agreed up front so that you have the ability to guide your client and then execute on those transactions. So I always know most of our clients complain when you throw the term bankability to them because
Yeah.
that can mean many things for many people. But I think in this case of banking traders, so you got a generated PPA and a customer PPA on the other side, and then you got a portfolio of generators on the one side and a portfolio of off-takers on the other side with a trader or aggregator in the middle.
Yeah.
How bankability around that work is quite interesting because we had to effectively go back to the drawing board, analyze the risk, break it down, and come up with a framework that we could internally get our head around in terms of risk allocation and liquidity support for those type of entities, and then have the ability to bank that. And for me, that is where we've been really very successful over the last 6 months. If you just look at some of the transactions we've banked, and it's not only funding the generator or the greenfields project on the supply side, but also providing some level of liquidity support to be able to drive these traders to be more effective and efficient. And this is just going to be such an interesting space to watch going forward.
I was chatting to Christian de Klerk of Growthpoint when they announced their recent deal securing energy for many of their property assets through an energy trader. And he said, sure, Michael, we've learned so much about how we price risk, but ultimately it's going to help us over time lower our energy costs and pass that on to our tenants. And, obviously we're taking all of that pressure off Eskom, and it is still putting pressure on the grid though, because you then got to wheel that power from wherever the various generators are and to the various assets. So let's maybe just talk about the broader grid issue a little bit. Are we doing enough when it comes to solving for our grid capacity constraints in South Africa at a broad national level to ensure that we start building out much more grid to ensure that we can unlock the benefits of these IPPs?
Yeah, Michael, I think it's the key focus of government at the moment. And if you look at how strong the Minister of Electricity came out in terms of the support to the ITP model, the Independent Transmission Project model, where they want to actually include the private sector and ensure that there's bankable program and support to be able to fast track the introduction of new transmission lines. And I have to be honest, we're very excited about the shift that we see in government in terms of new focus. The minister effectively signed the determination of the first, I think, 1,160 kilometers in 3 different nodes. And I think if we could get that going through the anticipated RFP, it will definitely give us a good idea of how private sector can participate in transmission projects. The contemplated model is build, operate, transfer, or build, operate, own and transfer, which will depend on the type of concession or payment, risk allocation, and how we will be able to bank that. And they are definitely present in how banks can get involved. So I'm cautiously optimistic. I think there's great momentum. The World Bank is involved in trying to shape a credit guarantee vehicle, working closely with National Treasury. So I think there's emphasis on trying to find ways to fast track these type of developments. I think the key is how we're going to implement this fast enough. And in the interim, we see great innovation through the traders. And one also should just remember, although traders do use the grid freewheeling, there's also still developments around embedded generation. And in some cases, you can find solutions where you have a combination of wheeled power as well as behind the meter type of solutions. So it's not one solution fit all. It's a bit of a combination providing that flexibility.
You think of some of the deals that have been announced at Air Liquide and Sasol with Enel Green Power, and the number of traders has, it's just mushroomed. If you look at it, there's Amply Energy, there's Discovery Green, there's I think NOAA got its license early this year, and others as well that I haven't even mentioned. So it really is a rapidly growing market. If we were just to look at whether there are any specific regulatory bottlenecks, like maybe curtailment rules or environmental permitting or bid guarantees that funders still feel could be urgently rethought to help improve the local environment, are there any that stand out for you as urgent?
I think what we've seen is more recently NERSA announcing the curtailment rules, which we welcomed. I think we're still studying the detail, but in effect, that will have the ability to unlock around about 3.4 gigawatt of new power, which will be mainly around these grid-constrained areas in the Northern Cape and the Eastern Cape and Western Cape. So I think that for us is also extremely positive. But again, we need to look at the holistic view around some of these permitting processes, environmental processes, getting your budget quote, and that need to be streamlined. And I think to a certain extent, the one-stop shop is helping, but there's still room for improvement. But I have to say, I think all in all, we're all positive. And if you look at the number of traders coming onto our market, you've mentioned NOAA. We this week closed our third transaction, basically greenfields generation projects, selling 100% of that power into NOAA as a trader aggregator, with them supporting their clientele that they are signing up. So we can see the momentum. We've also recently done a transaction with Etana where we played in the guarantee structure with BII and Grantco and supported the greenfields project selling into Etana. So we definitely see momentum around those type of projects. We've also participated with Red Rocket in a wind project selling to Discovery Green. So the question around bankability and ability of commercial financiers funding greenfields projects to sell 100% to these aggregators or traders, for me, we are there, and we can see this market certainly evolving and taking shape as we roll out more projects.
Fantastic. Great message, Rentia. And I think at this time, as so many people are worried about the immediate threats of load shedding and a cold winter, there is so much happening underneath the surface sometimes that we don't get to hear about or talk about enough or see. And clearly, from a bank funding perspective, this kind of deal pipeline is great for the banks. It's great for the broader economy, energy security across the continent, the construction industry, employment, all of those good multipliers. And I think if there's one message that I've taken from the conversation, it's that finance also isn't just about deploying capital anymore. It's about partnership. It's about co-creating the systems that will hopefully define our energy future across the African continent. So thank you very much, Rentia van Tonder from Standard Bank CIB, for sharing those great insights. And thank you too for tuning in to the Monocle Banking Podcast. As always, don't forget to subscribe, share, and send us your thoughts on what else we should be unpacking in Africa's financial transformation. Until next time, I'm Michael Avery on the Monocle Banking Podcast.